Good morning and welcome to this Wednesday, April 12th, 2023 edition of Trading Places live at earningsbeats.com. I'm Tom Bowley, Chief Market Strategist here at Earnings Beats, and I'll be your host for the next 30 minutes, featuring everything you need to know as you prepare for the trading day ahead. Well, big news this morning. We had the March CPI out and the latest report. Good news on the headline number. We were looking for inflation to come in at a rise of 0.3%. It actually came in rise of 0.1%. However, the Fed tends to look at the core. That's what I like to look at. The headline number can be swayed pretty easily by things like energy and food prices that can go up and down. So when you strip that out, that gives you the core CPI, and that came in as expected, rising 0.4%. So it was a good report. I wouldn't say it's a great report. Futures responded pretty well to it. I think they are starting to come back down a little bit, but we did have an initial surge to the upside. Right now we have the Dow Jones. I'm looking at the DIA on stock charts. Pre-market, it's at up $1.54, which is up about almost 0.5%. The Spider is up $2.30, which is up about a little more than 0.5%, 0.56%. And the QQQ right now is up about 0.75%, up $2.37, back up to 318.20. We closed yesterday at 315.83. The NASDAQ's been the index that's been getting hit the hardest over the past maybe week or so. A lot of that's coming at the opening bell, where we've been seeing more gap downs on the QQQ, and then maybe a little bit of downside first 30 to 60 minutes of trading. And then we've been seeing a rebound. We've been seeing the overall market come back, including relative strength in the QQQ over the balance of the day. So overall, I think the action has been pretty good. We did have a little bit of a sell-off into the close yesterday, but I'm not surprised with a big report coming out this morning. I would think that there would be a lot of cautious investors ahead of this report today. I think bad news could have sent the market down on a gap for sure. Whether or not it would have held, I guess, remains to be seen, or I guess we'll never know. But overall, I thought this was a pretty good, decent report. No negative surprises, which was good. And I think gives the Fed some additional ammunition to think about stopping the rate hikes. Or certainly no reason to increase 50. And as long as we keep seeing inflation on this trajectory back down, I believe by the end of the year, we're going to see the Fed cut rates, because they're going to start looking at if there's no inflation issue out there, they're going to want to support the economy, make sure we don't go into a recession, or not into a deep one anyway. And so kind of achieve that soft landing, if you will. Anyway, that's where we are this morning with futures. Looking at the crude oil, we are up 55 cents a barrel. We're back over $82 a barrel. Pretty significant area of resistance on crude oil. We'll see if we get through that area. 10-year Treasury yield down 6 basis points this morning, back to 3.38%. So we were getting up close to that declining 20-day EMA. I'll show you that on a chart in just a minute. But now we're moving back down toward the lower end of the short-term range. So all in all, not a bad start to the day. We are in a bullish period historically for the market as we start moving closer and closer into earnings season. So let me go ahead and get this started here. Let's take a look at what happened yesterday. So on Tuesday, we saw the Dow Jones Industrial Average finish up 98 points. That was up about 0.3%. S&P 500 basically flat, down 0.17. So still sitting just above 4,100, right around 4,109, but really flat on the day. The NASDAQ lost 52 points, though, which was down 0.4%. That's what I was alluding to earlier. We're seeing a little bit of rotation away from the NASDAQ the last 4 or 5 days. It's not been that significant, but it's been noticeable, especially if you're watching intraday. Good news is the AD lines continue to be very strong. And the reason for that, we've been finishing pretty strong in the afternoons, yesterday being one exception. We did see the NASDAQ take a little bit of a tick down on the AD line yesterday because it did close weak. But for the most part, we've been closing near the highs in the upper end of the trading range each day. And that is what drives the AD line higher. You take that percentage where you finish on the, relative to the day's range, and then you multiply it times the volume. And that is what gets added or subtracted to the AD line. So overall, I still think everything looks pretty good here. We are trending above the 20-day moving average, which is above the 50-day. The daily PPO is positive and the AD line's rising. Kind of hard to argue with that set of technical indicators. When you look over at the S&P 500, we just got the golden cross, the 20-day back up above the 50. Now, when you're consolidating like we have on the S&P for the last several months, you tend to see the moving averages go up and down and the 20 go above the 50, back below. We really don't have an uptrend established yet. You can say we have one established off the last month, and I think that's almost indisputable. I mean, you can just look at that and see that we're trending higher, but it's within the confines of this sideways consolidation, at least on the S&P. On the NASDAQ, it looks a little bit more bullish because that move in February took out the triple top from back toward the end of 2022, pulled back, and then we reestablished this right side of a cup, back in a handle now, and waiting to see if we get a breakout. I believe we're going to, but you got to see it happen. You can't just assume. But I see a lot of other signs that point me in the bullish direction. So I think it's just a matter of time before we make this breakout. But again, you do have to see it. Mid caps and small caps continued their move to the upside. Mid caps up almost 0.9%. Small caps up about 0.75%. Both climbing back above their 20-day moving averages. But look at their 20-day versus the 50, and look at the major indices. So you got the Dow, which is just about ready to make its golden cross. The S&P just made a golden cross, and the NASDAQ's it's had its 20-day above the 50-day now for a few months. So the technology area is certainly helping. Communication services, consumer discretionary, those have been the hot areas in the first 3 months of the year. And as a result, they're carrying the NASDAQ on their shoulders to the upside. But a lot of more work to do technically on mid caps and small caps. But I do think that there is reason for hope in these two groups. I've pointed it out recently to members. I'll show you a couple things here in the charts in just a couple minutes that I find to be somewhat bullish. We'll see if they get follow through. As far as sectors go, energy up almost 1% yesterday, battling this 87.5 area again. This has been a level where we have tried to get through now 3 different times. Can we get through? We've got crude oils futures or crude oil prices up this morning, back up over $82 a barrel. Maybe that will be the catalyst to get the energy group back through 87.5, moving back toward its recent highs. Then you've got financials. This is more of a dead cat bounce in my view at this point. I don't know that financials are going to go lower on an absolute basis, but I think on a relative basis, I do expect, with all the issues around banking right now, the inverted yield curve and so forth, I think financials on a relative basis could struggle. I hope I'm wrong. I'd love to see the financials come roaring back. That would certainly be much more bullish for the overall market. But starting with earnings on Friday, we got a lot of the big banks beginning to report. JP Morgan, PNC, Citigroup. I know they all report on Friday. There may be one other. And then next week will be very, very heavy with bank earnings. So we're going to see over the next 7 days what these banks are saying, what they've reported for their last quarter, but maybe more importantly, what they're seeing for the next quarter or for the year. If you know much about banks, you know inverted yield curves are not good for banks, for their profits. The rising short-term rates, that's their cost of funds. That's how they borrow. If a bank wants to borrow, they go to the Fed and they do it at the Fed funds rate. That's you got problems there right now with rates going up. And then on the long end, rates are coming down. So things that affect the longer term investments of banks, they're receiving less of a yield on. So you've got income going down and you've got expenses going up. What does that tell you in any business? Probably numbers aren't going to be very good. So how much of that inverted yield curve has already played a role in bank earnings, and how much will it impact future earnings? That's what we're going to be looking at. That's what we're going to listen to from a lot of these bank reports. And it's not just the bank reports, it's the reaction to the bank reports. If Jamie Dimon comes out and says, hey, you know, we see rough quarters ahead, and it breaks out to new highs, then obviously Wall Street sees something a little different. So let's see how the reaction to the earnings come. But that's going to be a big area of the market, I think, over the next couple of weeks. If there's one area that could potentially take the market down, it's the financials. So we want to keep a close eye on that group. Materials, also nice day, up about 0.8%. Nice little rise there, back up above the 50-day yesterday. Industrials up 0.6%. So it too had a pretty good day. Not bad. You had two. It was more value oriented again. And we've seen that here over the last week or so. Money has rotated. We've had a huge run in 2023 among growth stocks. Right now, as we get ready to head into earnings season, we're seeing a little bit of rotation. And by the way, the month of April, this isn't completely unusual. We do tend to see a little bit more outperformance in the value area in April. But once we get past April, things change. And that can get really exciting for the growth stocks. Anyway, technology, the weakest sector yesterday, down almost 1 full percentage point. It's been rising. Nice AD line, beautiful PPO. I have no issues here. Still trading above the 20-day EMA, which is at 146.08. We're still a good solid 1% above it. And with futures this morning, looks like we should be in pretty good shape, at least at the open this morning. All right, moving on, 10-year Treasury yield. So we did get that March CPI report, as I mentioned. Headline number came in a little bit better than expected. Core number came in exactly as expected. Let's get an update here. Right now, we're at 3.38%. That is down 5 basis points. I said we were trending below the 20-day EMA. You can see it here. That's the green line. Right now, the 20-day is at 3.48%. We're sitting, excuse me, at 3.38%. And then recent lows down around 3.27%. So the 10-year Treasury yield sitting right in the middle of what I would consider to be the short-term support and resistance. The yield support here from just less than a week ago, last Friday, or last Thursday, and then the overhead resistance at the 20-day EMA at 348. So trading in that range until we break one or the other. I don't really pay much attention to what's going on in the 10-year Treasury because you're going to get consolidation. You're going to get back and forth. You're going to get, a little bit of short-term volatility without a doubt. But do we break back above the 20 or do we break back to a new low? I would say based on today's 10-year Treasury, based on today's CPI report, I think the 10-year Treasury yield will likely trend lower. S&P 500. So let's do a little bit of looking at the chart. Still not a whole lot to decipher in terms of a long-term trend. We got to get clear that August high. Been talking about that. Won't spend any more time. But short-term, we are trending higher. We got a nice uptrend. There's your golden cross, the 20-day moving above the 50-day. This is the configuration you see with uptrends. Now, we haven't confirmed. We haven't broken out above any major levels. And you can see we've had plenty of moves up above the 20, which is above the 50 with the PPO positive, only to roll back over, and then to do it again, only to roll back over, and now we're doing it again. I believe one of these is going to stick to the upside, but right now it's too early to call this one. We don't know. We're going to likely see a decent gap up this morning, but we got to clear 4,200 first, and then 4,300 is the big one from the long-term perspective. So there's going to be a lot of noise. I would like to see the rising 20-day moving average continue to hold. If it doesn't, then it paints a picture of further consolidation. And that's not exactly what we want to see, especially from the bullish side. Maybe the bears would like to see the consolidation as opposed to the uptrend. But from a bullish perspective, we're ready. We're ready to see this thing move to the upside. We're already up over, I think it's 20 at the high on the NASDAQ. We'll move over to the NASDAQ 100. I think at this high, we were up 26% off of this low. So the NASDAQ 100 is already back in bull market territory by that 20% definition. And we'll see what happens today. Do we break back out on the NASDAQ 100? Can we get through the end of March high? If so, the big level here is 13,750. That's the August high. So if you start seeing 13,250, just know we're only 500 points away, or roughly 4%, from a major test up at the August high. And one thing, I've been talking about how I think the market's going to be bullish through much of the rest of the year. One thing we have to consider as a possibility is that this comes down as the left shoulder. This is a neckline. This is triple bottom head on the NDX. And then we go up and we hit neckline resistance and fail at 13,750. Possibly pull back. Maybe we get all the way back down to I don't know, maybe we get a 50-day test. Maybe we go down even further. It's possible over the summertime, maybe. I don't know. I don't think so based on history, and I don't think so based on the signals, but that is a possible formation that we need to at least keep in the back of our mind. All right, small caps. Excuse me, let's get some water. I love springtime, but springtime doesn't love me so much, not with the allergies. Anyhow, small caps. So what I wanted to point out here was it looks kind of interesting what we're doing right now versus what we're doing a couple of other times in the last 8-10 months. So I just want to, and this is what I pointed out, I think I was in yesterday's daily market report to members. But you see these bottoming formations? I mean, it seems like the structure is very similar. And what really set it apart was when we took out the initial rise, that initial price resistance right there. So we go down, we bounce, then we kind of come in, not quite a double bottom here, and then we move back up and take out that prior high. And once we did that, we had a really nice run. Look at this. This is the second time we had almost the exact same pattern. And with this one, we had the initial bump. This time we went back, had a double bottom, came back up, failed one time, pulled back a little bit, and then boom, back out of this consolidation, and we had another nice run to the upside. Look at what we got going on right here. I mean, we got this move down. We've had the big rally back. Now a slightly higher low, and here we come back to the upside. Can we make this break? Because small caps have been underperforming. Mid caps have been underperforming. But each time we have seen, at least the last two times, and that certainly doesn't guarantee us anything this time, but the last two times you can see what has happened coming out of these consolidation periods. Now, will this start to run if we get through? I don't know. No idea. But it's just worth mentioning because we have been sideways consolidating, and I thought the structure here was very similar to what we saw here. I mean, this one maybe to a little lesser degree. If we do the same thing here and just kind of circle, it's just we came down, we had a much smaller bounce, and so we could put that kind of in over here. And then when we finally made the breakout, you can see, so that was maybe a similar structure. Even over here, same thing. We had a little bit of a pop, almost double bottom when we went out. This one we didn't rally as much, but in my opinion, we were still heading into that final low for at least when I called the bottom initially back in mid-June. So, I mean, it looks pretty good to me. Let's get this breakout. But if you're thinking, hey, small caps have been lagging, this might not be a bad play for a short-term trade, maybe at least a portion. If you've been trading the QQQ or maybe the leveraged ETFs that track the QQQ, maybe you think about the small caps as maybe a portion, just because it does have this pattern. If we get the breakout, it does show in the past, the recent past, that this structure has been very important once we get the breakout to leading to outperformance in small caps, or at least leading to solid performance. I'd have to go back and pull up a relative chart to see if it was actually outperformance. Mid caps, I'm not going to pull up and annotate, but you can see basically the same structure here, lesser degree there, but here for sure, and here for sure, same thing. And even here, Just didn't last as long there. But same type of thing, rally, hold the prior low, break out, rally, hold the prior low, break out. Here, rally, hold the prior low, break out. And here, rally, hold the prior low so far. Now we need the breakout. So watch that. Next thing I want to go over, chart of the day. So this is the chart that was featured this morning in the EB Digest. If you would like to receive the EB Digest in your email every Monday, Wednesday, and Friday morning, you can do so by going over to Earnings Beats and scrolling down and signing up right there. Name and email address. That's all it takes. No credit card required. You can unsubscribe at any time. 3 times a week newsletter. We'd love to have you. Also, while I'm here, I want to just mention on Saturday, if you missed the Market Vision event that we did back at the beginning of January when I gave you the forecast for the balance of the year, well, here's your second chance to come in and listen, because I'm going to give you our bullseye forecast for as of April 15th. So it'll be where we close on Friday the 14th. Looking at all my signals, I'm going to give you what I believe is going to be the way the market plays out the rest of the year. And if you've been to these Market Vision events the last 4 times, 2020, 2021, 2022, and 2023, then you know I have nailed the market 4 straight years. Pretty darn close to what actually transpired during the entire year, 4 times in a row. So I think it's at least worth listening. You may not agree, and that's fine. Market is made up of 2 sides. So you may not agree with what I say, but I think it at least will give you some really good information to consider before you decide what you want to do with your investments. So right there, Saturday, you do have to register, get that spot. So click on that, make sure you sign up with your name and email address. Again, you go over to earningsbeats.com, plural, both plural, earningsbeats.com. All right, getting back to that Braze chart. So this is the one I featured this morning. Look at the AD line, just soar. First, we went down. This was the earnings report. We had this huge move up to 38. We came all the way back down, which ordinarily I would say maybe is a little bearish, but we did close above that prior high close. So we did make the breakout on the close on one of the heaviest volume days of the year. Now, because we had so much selling on an intraday basis after reaching that high at 38, I'm not surprised that we came back down. But look, as we come back down, look at all these long tails. This is how you get a strong AD line. If you have big volume and you close at or near the high of the day. We have closed at the high of the day, or at least above the midpoint of the day every single day since earnings. That is why you are seeing the AD line take off here. Because as we drop, we went all the way back down, filled gap support. As we drop, we are seeing a lot of buyers coming in intraday and sending the prices back up near the high of the day by the close. And if you look on a 10-minute 5-day chart, you'll see a little bit about what's happening. I'm going to go back 2 weeks. So here was the earnings move and then the selling. That was probably a lot of market makers. Everybody buying, they're selling. Of course, it's not unusual to see after a gap up, prices move back down. But look at the next day. Pretty much all accumulation. Then the following day, we went down first half of the day, but look at the rally in the second half. Next day, opening gap down, amateur hour, selling. End of the day, back up near the high. Morning the next day, selling. End of the day, not at the high, but back above the midpoint. Here we go again. First 2.5 hours of the day, down. Afternoon, big rally. Yesterday, I don't know if that was any errors involved there, but it's showing that we went way down. But of course, we finished stronger. I think the stock's being accumulated. And when I look at the chart, if I connect the highs, I could drag that line down to the low and have a nice little channel going. Got the software group moving up. Braze made that initial jump in relative strength. But while it's consolidated and moved back to the 50-day, it's kind of pulled back. I think the big thing to watch on this chart, even more than the price chart, is whether Raise can clear right there on a relative basis versus software. If you see this line taken out to the upside based on their earnings, by the way, Braze has beaten revenue and earnings per share estimates 4 straight quarters. Now, that doesn't guarantee we're going to see higher prices, but fundamentally they're coming in, they're at least giving cautious guidance so that they're able to beat their estimates. And I like that about a company. I like not having to worry going into earnings that they're going to come through and they're going to beat estimates. So anyway, I think this is an interesting chart. Just can't kind of keep this on your watch list. All right. I had a question come in on one of the videos the other day asking about my take on the cryptos. And I'll tell you, I don't trade cryptos, but we can certainly look at the chart to wrap up the show today. Take a look at a couple of these charts. This is a 5-year chart of Bitcoin. And what you have to realize is that after going sideways here in 2018 to 2020, Bitcoin went from 10,000 to 65,000 in a year. Now, I don't care what you're trading or what you own. If you go up 600% in a year, you should be prepared for, I mean, maybe it goes up another 600%, but most of the time you're probably going to see some selling, some consolidation. A lot of people wrote off Bitcoin when it was coming back down, and actually somewhere back, maybe the beginning of the 4th quarter, right around in here sometime, I don't remember when, maybe it was sometime in the 3rd quarter, I said I thought Bitcoin would come roaring back. And of course, right after I said that, it went down, took another leg down. I remember I said it before that last leg down. And I think we were around 19,000, 20,000. So it probably makes sense that we were somewhere maybe in September or into early October. Anyway, shortly after I said it, we had another move down, went all the way down to 15,000. But since then, you can see Bitcoin has now been rallying very strongly. I like the chart of Bitcoin. Now, the reason I don't trade Bitcoin, I like to at least have a little bit more fundamental understanding. I have fundamental understanding of stocks. I'm a prior practicing CPA. I audited companies. So stocks, I understand the fundamentals. I understand the technicals. I've studied history. I've got a lot of perspective. I think I can use a lot of common sense. I can analyze stocks and have a much better idea. And you can't understand and try to be an expert in everything. And with cryptos, I don't really completely understand exactly how they work. I haven't dug in enough. So I pretty much just rely on the technical side of things and look to see if we're going up. One thing I find interesting, if you pull up this 5-year weekly chart, here Bitcoin is this is the absolute price chart of Bitcoin. And then down below, it's the correlation between the direction of Bitcoin and the direction of technology relative to the S&P 500. So in other words, I'm looking, technology is a risk on area of the market. And when it's outperforming the S&P 500, that's usually a really good sign for equities because it means investors are willing to take on risk, right? I look at Bitcoin as being somewhat risk on as well. Look at the bear market we went through and look at how poorly Bitcoin performed from January through October. That was pretty much down near the bottom of the stock market. So, we had a top in November of 2021, which is when the NASDAQ 100 topped. And we had a bottom in October or maybe early November, which is right when stocks bottomed. So it's starting to give the characteristics of a risk-on type of investment. And when I did this correlation at the bottom, it kind of confirmed that. It's not perfect correlation. We're not seeing everything up here at 0.75 to 1.0. We have periods when we go negative. But I think when you look across this, you see more positive correlation than negative. So I use Bitcoin now as one of my signals that when it's doing well, I think that's good for stocks. Why? Well, history tells me that it's good. It's at least good for technology, and technology led the bull market. So I'm kind of doing some inferences here, but I think the fact that Bitcoin has taken off here in 2023, it's no coincidence that stocks, the growth stocks, have taken off in 2023. And look at the correlation right now, almost perfect 1-to-1. So that's my takeaway on Bitcoin. Then you got Ethereum, and Ethereum pretty much did the same thing, had this huge move up, came down during the bear market, double bottom, almost perfect June bottom. And then this was actually in November instead of October, double bottom. And now we're moving back up. Can we clear 2000? That's my technical point on Ether. And again, for the most part, we see positive correlation with the XLK. And then the last one I had was Litecoin. I wanted to show you. Litecoin made a huge move up. Another one that dropped significantly during the bear market, actually dropped even before. This one almost kind of has the pattern of like small caps and mid caps. And I didn't try to see what kind of correlation there was there. Still pretty good correlation with the technology relative strength. But here we want to see this definitive breakout over 100. That's what we're looking for on Litecoin. Now, the last thing I did, and we're going to wrap this up. I know the market just opened. Bitcoin versus Ethereum. So Bitcoin for 2 years was trailing the was trailing Ethereum. Hold on. So for 2 years, it was trailing Ethereum. And now it's starting to show signs of outperforming Ethereum, but it needs to clear that mid-June relative high. So I think I'd probably still lean a little bit more toward Ethereum, especially if Ethereum breaks out above 2000. I think part of what's going on right now is Bitcoin's outperforming because Ethereum hasn't made its breakout, whereas Bitcoin has. So that's kind of my take there. And then maybe one last take is on Bitcoin versus Litecoin. And here you can see Bitcoin was clearly the outperformer, but then it underperformed Litecoin for a while, and now it's starting to substantially outperform Litecoin again. So at this point, my pecking order is probably Ethereum still first, but I want to see that breakout, and then Bitcoin, and then Litecoin. That would be kind of the order for me in terms of cryptos. And there are a ton of different cryptos. And again, I don't spend a lot of time studying them, but this is how I would, if I was looking at other cryptos, compare them to the standard, compare them to Bitcoin. You know, if you're trading, was it Dogecoin or one of these other, can't remember the one that starts with the SH or whatever. Anyway, if you're looking at one of the smaller ones, just look and see how it performs relative to Bitcoin. And if it continues to underperform, then put your money in Bitcoin. Go with the leader. I don't think cryptos are any different than stocks. Go with the leaders. All right, let's see what the market's doing and wrap this thing up. A decent start. Again, core CPI was exactly as expected. I think this was good for the market. I don't think it was explosive for the market. You know, I did put kind of an explosive headline on this on our YouTube live stream. But I mean, we saw a good headline number, and that's what most everyone focuses on. That's where all the headlines go. But really, it's the core that you want to pay attention to. And the core for me was good. Not great, but it was good. It was as expected. Doesn't look like inflation's getting away from us. I don't know that it changes the Fed from raising another quarter point. Personally, I think the bond market's looking further down the road. I'm looking further down the road, and I see a Fed that is going to hit the brakes on rate hikes. And if anything, maybe put it in reverse. And by the end of the year, I would not be shocked to see rate cuts start. But anyway, that's my take on what's going on at this point. I will be back tomorrow over at over at Stock Charts TV for your next Trading Places Live. That's a recorded version. It airs at 9 a.m. So if you want to listen to that, go over there at 9 a.m. tomorrow morning and simply just click on the Stock Charts TV link. You don't have to be a member of Stock Charts or Earnings Beats to listen in. So that is free. Make sure you check that out. And again, please go to Earnings Beats and sign up for Saturday. Listen, I could do this for our members, and I do a lot for our members, but I like to help our community. And again, you don't have to agree with me. Just consider some of the things that I have to say. I do a lot of research in the market, a lot of historical perspective. I think I have, and I've got fundamental background, technical background. I think I can give you some really good information and at least points to consider. And if there are things out there that are bullish, I'll point those out. If there are things that are bearish, I'll point those out. And then you can take the weight of the evidence and try and figure out what's best for you in your own personal financial situation. Anyhow, I hope to see you there on Saturday. I'd love to have you. Take care, everybody, and happy trading.